Raunak Onkar is joining us, co-equity fund manager and head of research at PPFAS Mutual Fund. Raunak, hi, good afternoon. Thanks for joining us. How are you viewing the current market mood as a fund manager? The market, and this has been one of the most hated rallies, right? Because a lot of people have missed out. But a lot of people thought they'll buy at 15,000, and the Nifty has jumped up to 18,000. But how are you approaching this space? Tell me.
Hi Anush, hi Prashant. Thanks for having me. So far, if you look at a fact sheet of the current month, we are close to about 9% in cash. We are about 22% in the overseas securities that we have invested in. And most of the ideas that we have liked in the past, we have already added a little bit more to them. So overall, we have almost fully deployed, with exception of 10% of cash. So it's not like we are finding great ideas everywhere. It's not a very easy market to find good quality businesses at reasonable prices. But we keep anticipating that we'll find something interesting.
I mean, look at the market, Anuj. I mean, another leg down. I mean, we were down 150 and we are down 200 back down. It's very, very sharp. Very, very sharp moves now materializing out of nowhere. So at about 17,763 is where we find ourselves at. Raunak, So give us a little bit more in terms of flavor. How are you thinking about picking stocks? What is the approach now? Are you kind of holding back a little bit after the run-up that we've had?
The approach is similar. The companies we like essentially stand in three main categories, run by great people, good businesses to invest with a long trajectory of growth ahead of them, and they should be in a sweet spot of valuation. We should be able to comfortably, reasonably own them over a period of time. And we can hold them for a long period of time. So that has been our sweet spot for finding ideas. So far, the ideas that we have invested in mostly are well known, and they have been in the portfolio for a while, in the private banking space, some of in the IT space, in global technology businesses, in digital ad businesses, in capital market intermediaries, and a bunch of pharma stocks. So this has been our overall portfolio construction for over a period of time. And we are finding the same ideas attractive because some of these ideas have a long runway ahead of them.
Raunak, one of your top bets is Sun Pharma, right? It had good numbers for 2 quarters. It's been the industry leader in terms of numbers, but just off late there are some headwinds. Your thoughts on the stock?
So in pharma, what we did was, instead of betting on one business with a large position size, we distributed that across a bunch of positions. So we have a basket of pharma businesses which are in the same generic export business. And we try and find the best companies in that space where we want to hold them for a period of time. And whenever we find one company lagging behind the other in terms of business performance, we move them around and add something else. So Sun Pharma is essentially a 1% kind of a position in the portfolio. The business is, again, generic pharma business we know as a long tail ahead of them. But the whole idea behind generic pharma is, can we pick the right business with the right market dynamics, with the right market structure? Can they perform? Can one company do better? The answer is no. So at one point, some company does well, the other company does better at some other point in time. So I think in this case, the cyclical benefits of Sun Pharma's investments in the past are helping them. In many other companies, we have seen that some of the cycles are a little longer to establish in the profits and revenues of these companies.
Raunak, I see that you own a fair bit of the financial services names, right? Now, the big, pretty much it's a bullish consensus kind of view, right? When we talk to institutional participants and otherwise also, and why not? I mean, companies are doing very well, and eventually stock prices should reflect that. But purely, this is also a space where foreign investors were the largest overweight, right? And where some of the largest amount of selling has happened. Number two is perhaps IT. But as they've come back, foreign investors, and bought about $3.5 billion worth of stock from the 1st of July, are they coming back into this space? Or, I mean, are we seeing different kinds of things? You take Max Healthcare, for example, that big block that happened, right? One of the largest foreign investors picked up a large chunk of it, right? 10% of that large block. I can cite other large block deals which have happened. I mean, is what they're getting back into very different from what they sold, which is banking and IT?
So we also do track a lot of these block and bulk transactions that happen, but we have not found a very long-term signal where we can predictably think of this as a data point for our analysis of these companies. So we're looking at, say, banking businesses, the theme has been that privatization is taking over a chunk of market share of banks, and that tailwind is huge tailwind is there with them. In IT, we know that there have been cycles in the IT business also, but in IT, there is structural change that happens, I think, almost every decade, where new technology comes in and you need technology enablement from vendors to all the customers in different verticals. So those trends are continuing very strongly in our country, and we are net beneficiaries of both of these trends. But I don't think there is a trend where we could find a signal of other people buying and selling stocks and giving us an idea whether this is a good time to enter or exit.
Okay. Now, your bet on Hero MotoCorp is finally paying dividends, Raunak. It's been a stunning rally. And Hero is not alone, actually. Others have also participated, right? But do you think the move has been too fast in some of these two-wheeler names?
I think narrative sometimes drives some of these stock price movements. But interestingly, the volume growth also has been visible. I think the longer term trend is that can you find an efficient two-wheeler manufacturer in our country? We have two largest companies globally as well in two-wheeler manufacturing space. And if these companies continue to do well, they have the right products in the segments that they're offering. And we are actually betting on both of them. We have Bajaj Holdings, which owns Bajaj Auto. We have Hero, which is an independent holding for us. So betting on both of them, which are highly efficient, profitable auto manufacturers. And of course, we have to be mindful about competition. It's not a very easy market to be in and cannot scale very easily beyond a certain point. So it's a very challenging thing to see how these large companies scale. At the same time, can they keep on delivering the way they have delivered in the past?
Raunak, do you still own IEX?
Yes, we do own IEX.
And this, when you would have noticed some recent new developments, the states being asked to clear dues before they can continue to buy power off the spot exchange market. Any thoughts? I mean, is this a significant issue, or I mean, it'll get resolved and things get back?
So ideally, the power sector is a bit more nuanced. So in the longer term, if you've seen that there have been a lot of issues with these recoveries of power dues and everything, and this is a very new development for an exchange. But I think it should be a shorter term thing. I don't want to predict too much. But it's interesting that a platform of this size, who has the highest market share, is definitely going to be worse off for a while till this issue is resolved. The volumes might shrink to that extent. But it remains to be seen whether this demand will come to the exchanges anyway, or whether the fuel supply agreements continue, whether the power agreements continue, we continue for these discounts with the Gencos.
Okay, now on your Nasdaq bets, Raunak, you've seen a very sharp rebound. But I was reading a report that maybe there's been some fresh shorting by hedge funds on some of these big names. Do you guess maybe there's the near-term upside could be capped here, or I mean, of course, you are a long-term investor, but just your view on these stocks?
So hard to predict on the stock movement, Anuj. But interestingly, the numbers that we have seen so far were decent. So with the digital advertising players, the numbers have been decent despite the headwinds that they have faced in the past couple of quarters and the demand that has gone away in some of the digital ad business. In the enterprise software business, we are seeing the same kind of consistent growth that is there in the past. I think most of the investments that are supposed to happen are happening at the scale at which these companies had predicted in the past, and they have been hiding these numbers also. So we are watching those numbers very closely. And if you look at some of the cloud computing businesses, so that enterprise IT side as well has been doing very well. So this is the non-enterprise software business, which is a services kind of a business where you consistently pay fees and keep running on the cloud servers. So that business also has been doing well, despite the fact that there have been not too much investments in new startups. But I think that space overall is being accepted as a standard of doing business, as we had 20 years in the past, where you had server infrastructure as a standard of doing business for IT companies. So I think all these engines are working in the favor of these large tech companies which are listed abroad.
Okay. You own capital market players as well, CDSL, Motilal Oswal, Raunak. I mean, any thoughts on what the growth trajectory for these could be like? And we got results from NSE recently. I mean, spectacular numbers, some 45% growth in the first quarter. And Q1 was arguably a slow quarter. Markets were down, etc. What should we expect from other capital market participants, brokers, depositories, etc.?
So these companies, although are capital light businesses and can generate great profitability over a period of time, they're also very cyclical. So we have to take in stride that these companies may not have the same trajectory of a consistent compounding nature of growth in revenues over a long period of time. So I think cyclically adjusted over a period of time as a capital light business would do well. And if you can retain market share, if you can retain your profitability and not let your expenses go wild, I think these companies should do very well, in my opinion.
Raunak, we'll leave it there today. Thanks a lot for joining us. Have a good weekend. That's Raunak Onkar, one of the most respected fund managers that we have.